Blockchains were invented to satisfy the use case of money. Is there anything that stands a chance of dethroning Bitcoin as a monetary asset? The answer is no. The majority of new Bitcoin adoption that happened this last year was via MicroStrategy. I do believe most Bitcoin bear markets have been characterized by a true loss of conviction, a real fear about, is Bitcoin over? I don't think that can really happen anymore.
Hello and welcome back to another episode of How to Sell Bitcoin. This is our final episode of this series, and I am your host Q, a member of the Swan private team, and I am joined by none other than Stephen Lubka, the VP of Investor Relations for Nakamoto. Stephen, thank you again for taking the time. So gracious with your time to talk to me throughout this series. I want to kick it off. We spent the last 5 episodes essentially talking about how to sell Bitcoin. And of course, any Bitcoiner knows there are a lot of distractions in this space. Let's just start there. How do you keep the focus on Bitcoin when you have a new fart coin or Dogecoin or enter whatever BS token comes up? How have you maintained focus with your clients?
Yeah, no, it's a great question. And I think it is in many ways, it is an education. It is an education story. It's about understanding. It's about understanding Bitcoin. It's about, you have to have a good reason, right? Like you have to answer questions adequately. So, if a client, one of the things I got all the time was XRP, right? Like this is, Ripple has had just a kind of a stunning level of staying power despite a very immaterial amount of, I'm surprised at how much it has stayed around. And so it's a topic that I would commonly get, clients kind of coming through. And so you need a good answer. You need a good answer for why it makes sense to stay on Bitcoin, whether financially, ideologically, whatever you have, really. You need to be able to communicate that. You need to be able to, answer their questions and also be knowledgeable about the other things that are being talked about. You need to know enough about Ripple or Fartcoin or Ethereum or whatever that you can actually have a credible answer, right? That has to be substantial. I don't think it's enough to just be like, oh, they're all bad. They're bad. Don't you know they're bad? You need to be able to understand, like, well, why? Why are they bad? How are you so confident that Bitcoin's going to succeed and these other things aren't, right? How can you know that? How can I know that? And so it's just, I think, having a very open dialogue about like, here is my reasoning. I want to share the way I think about it.
Amazing. And, I've had the fortune or misfortune, if you will, of actually being on some calls with clients who have asked about Ripple. Let's just kind of unpack that a little bit, if you don't mind for a second. Like for you yourself, why were you never enticed, never swayed into the Ripple universe?
Yeah, so to me, the value proposition of a digital asset, and I say that just to be like an asset which trades on a distributed ledger, right? Like the value proposition is downstream of decentralization is the first part. Which assets actually need decentralization? Because most don't. Apple shares do not need decentralization, right? It's fine. Like there's a central registry. It's not too big of a deal. I'm not saying there's no benefits if you had kind of a whatever, but it's generally speaking, like I'm not upset that my Apple share doesn't have, it's not decentralized. It's not a bearer asset. Now, with decentralization being the key point, you then get to a second question, which is, well, what applications does decentralization actually help? Like, where does it matter? And the biggest answer to that question has always been money. It matters for money. And I think the thing that was always clear is that blockchains were invented to satisfy the use case of money. They were not invented to satisfy the use case of supply chains or whatever else. And it was designed in this way. It's uniquely suited for money. And so then when you look at like, what is the level of moneyness of everything else, right? Like, okay, if like the real thing that's here is kind of decentralization, and the best use case, the use case that benefits the most from that decentralization is money. Well, which of these assets is more money? It has qualities of money. And it's like Bitcoin clearly a mile ahead. It is trying to be money. It is not trying to be a tech platform for people. It is not trying to be a settlement layer for banks. It's not trying to be an app store. And so in a very real way, the thing we're talking about here is geared towards what Bitcoin is. And then if you ask the latter question, which is how much of a lead does Bitcoin have on everything else as money? Like is there anything that stands a chance of dethroning Bitcoin as a monetary asset? The answer is no, not at all. Ethereum's not going to do that. Ripple's not going to do that. None of these other coins are going to do it. They're nowhere close. They're not even in the same universe.
I love that. And to kind of hammer that point home, I think for myself, I focus on three aspects of Bitcoin for myself. That this is kind of my tagline of the decentralized node system gives it a sense of security that allows Bitcoin to operate in a way that, frankly, I love to pick on Solana with their entire server farm on one floor of, or multiple floors of an office building in San Francisco. Like, you and I can't run a Solana node. You also have this sort of hard cap of 21 million. You don't have this arbitrary infinite money printing mechanism, which we're all trying to get away from. And I also find there's importance actually in Satoshi Nakamoto remaining completely anonymous. You don't have this founder. You don't have this point of failure. Like, I say it in jest, but I'm serious. You want to tie millions of your own net worth to Vitalik, and the belief that he is not ever at any point going to be, taken by a nation state or be forced to do something to the Ethereum network that would be at your own personal dollar values detriment. It's just not a bet I personally am willing to take.
I'm glad you said that, because I actually meant to go there in my answer. When I was talking about decentralization, I wanted to also make the point that Bitcoin's the only asset with no issuer. There is no central party which either did issue or can issue Bitcoin. And that is a huge difference because, even like, there are these central parties that played a critical role in the launch, issuance, and control of these assets. And it's night and day with Bitcoin.
Absolutely. And I want to kind of switch the gears now, not entirely, but again, these conversations with clients, we've sold them on the Bitcoin. They're in it. They have an allocation of their portfolio is now tied to Bitcoin. How are you keeping your clients engaged? How are you maintaining that relationship and continuing to add value to them, their portfolio, and their well-being in life, quite frankly?
Yeah, so it's an ongoing process, right? Like maintaining relationships with clients, and it's about being there for them as things happen. Like, once you're onboarded, it is a question of navigating the real-world landscape as it comes, and that's something that no one knows the answer to. We don't know what's going to happen next month or the month after that. Like, constantly new things are happening. There's political shifts, there's treasury companies, there's soft forks and upgrades, and there's prices up, prices down, prices sideways. Like, these are all scenarios that clients want to be able to get an opinion on. They either both what you think and even how to think of it, right? So even if it's like, it's not just like, what is your opinion, but how should I think of this? How can I learn to think of this? Like, how can I learn to interpret these events? People on Twitter are saying there's price manipulation, the OTC desks are running out of coins, etc. Like, is this true? How do I think of this? Because people, when they enter their Bitcoin journey, right, they're just going to come across a lot of things. They're going to come across a lot of comments, newspaper headlines, the New York Times said this, and you can be somebody that helps them, that provides insight and experience in making sense of a new world.
My assumption is, as you have gone through yourself in this role or in your previous role at Swan Private, those types of conversations, I'm assuming, vary during bull and bear markets.
They do. They absolutely do. They're different conversations, and they're just, they're in response to fear and greed and excitement and the oscillation between these things. And, it's a different, when it's falling or when the price is rising, there's there's fear and there's FOMO, and, people need a little help in managing allocations, deployments, holding versus selling, buying versus buying the top, so it's all of that. And, something that I think is so helpful for someone like yourself or somebody that, whoever comes to fill this role next of VP of Wealth at Swan, there's so much utility to being in public. I think one must just live in public. And I think that provides a very broad platform for clients to have a relationship with you. Like you have X number of interactions that you have personally and privately. But I think there's a very real way that if you're out in public doing things, clients and can have a relationship to that too. It's more points of contact with you, and it scales.
I want to talk a little bit about, the authenticity of the type of content and the type of conversations you're having. Obviously, when you have individual one-on-one clients or even the roundtables that we have with some of our Swan private clients, you're able to have that sort of individualized conversation catered to that person. But at scale, how do you maintain that authenticity to make sure all of these clients feel as though they're heard?
Yeah, I think it's less that everyone feels that they're heard, and it's more that you are conducting yourself in a way that allows people to feel connection, that allows people to feel some sort of relationship with you. And even if that thing is not something they're interested in, or, it's in such a way where like they can sense that relationship, they can get to know you. And I think that's the better thing for its scale. And I think, also I think the sweet spot, we talked a little bit about social and online. I think the sweet spot is an intersection of credibility and quality and effectively humor or like shit posting or I think that's the sweet spot, right? Like somebody who can simultaneously be high quality, credible, thoughtful, they could write analysis, and they also have fun. And they also just like play the game. Lynn Alden's a great example of this. She does both of those things very well. She is incredibly thoughtful. She is incredibly just has a level of analysis that I think is above most. And at the same time, she is an incredible shit poster and has a lot of fun and leans in and plays the game. And I think that's your sweet spot. I think that's your sweet spot is it's this, you need to be credible and coherent enough that people respect your views in a real way. And you need to be approachable enough that like, it can be fun. And you're not like buttoned up. You're not like rigid. I think there's people that are really smart but are really rigid. And I think there's people that have fun but aren't very smart.
You have to strike that balance. I also, I love that we're, bookending this a little bit with this thought in mind, but it all goes back, I think, to how the relationship first began. And we talked about this in the first couple of episodes. We as reps come from a place of genuinely caring about what is best for our clients and what they want and need. And you build that trust over time. And it gives you, I think, that slack to shitpost a little bit, to show that personality, to show like, hey, I am knowledgeable. I understand Bitcoin. I can answer your questions,
Yes.
But also I'm a human being as well.
Correct.
You have your interests and I have mine. And it helps to humanize us. And I see exactly that, of like, it further develops and deepens that relationship when you can relate to someone about family, about your interests, and it goes beyond just a simple rep and client relationship.
Yeah, exactly. And like, let's like, again, I kind of laid this out. Like, if all someone does is like ship post and let loose and like play games, then even if someone really likes you, they don't respect you, right? They don't respect your view. And that's not a good place for a client relationship, and that's not a good place for doing something professionally. But if all you do is analysis, if all you do is that sort of content, people might respect you, but they don't want to hang out with you. And the sweet spot is where they both respect you and want to hang out with you. That is really what you want. Otherwise you get kind of boxed in. And again, when I say all this, like, it's like I'm being asked to formalize a thought process. I'm being asked to reflect and turn it into like a prescription. It's not even like, that isn't even how it is in practice. Like, I'm not sitting there like thinking that I need to do this or being like, okay, I've had 3 ship posts today, time to say something that matters. I think it's just, it happens naturally when I think you're not afraid to just express yourself and have fun, but you're also seriously and thoughtfully engaged in something that interests you. And it's natural that you will have thoughts and comments. It's natural that you'll have a comment on something that happens with markets, right? And it's also natural that you'll think of a joke in response to markets, I think if you really bring your whole self to the table, in a sense, and you're watching the world unfold, you're watching news, you're watching geopolitics, you're watching Bitcoin, like, I've written a bunch of threads and posts on how I am seriously thinking about Treasury companies and where they are this year and why they matter. And I've also had a lot of fun leaning into a lot of the jokes around, that every Treasury company needs to acquire a Bitcoin podcaster, and we need to create an MNAV bidding war for Bitcoin podcasters, and which podcasters would add the most MNAV, and where's the auction house, right? And like, it's a joke. It's true in a little bit of a way, but it's the same thing. Like, one side is, commenting on it in a serious way of what this opportunity is, of where it comes from, of why it's robust and important, why it's going to impact capital markets. And the other is realizing that, like, there's jokes and there's comments in the community about, all of the influencers joining Treasury companies. And they're not wrong, right? Part of humor is saying the true thing that most people don't want to say, or it's uncomfortable to say, in a sense. Like,
100%.
and you got to lean into the joke. You know what I mean? Like, I don't think it's a problem in any way. I think it's natural. I think it's fine. I even think influencers should have jobs. I think
what a crazy idea.
Yeah, they should be able to get a paycheck too. But it's there's reasons it comes up. There's reasons people comment on it. There's reasons, like, there's fears, and like, the comments reflect fears. They reflect fears of the Bitcoin community changing, of more influence by corporate interests and other things. And people are allowed to feel that way. And in fact, like, of course they do. Of course, that's a new force that Bitcoin will have to navigate. But the thing I understand is that Bitcoin has navigated many forces in its history. It navigated mining cartels. It navigated, the New York Agreement. It navigated, like, that's what it does. That's what Bitcoin does. Bitcoin navigates things. And that's not me saying the Treasury companies are bad. It's saying, like much else, they're part of the evolution of Bitcoin. They're part of, like, just like mining operations scaling up. We're part of, it wasn't bad that mining operations scaled up, but one externality of that is suddenly you had, these entities that you were dealing with. And right, so it's like the community is expressing their concerns and, like, what's on their mind. And, I think it's important to lean in. It's important to have a little fun with it. And it's also, like, it's self-awareness, right? It's self-awareness. I think what can feel so dangerous or threatening is when there isn't self-awareness. You know what I mean? When these trends and these things can happen when the mining companies are not aware of the externalities that they have, when the influencers are not aware of the playbook that's going on, when the companies are not aware of what concerns the average investor has of their existence, right? And I do think, I think leaning in to the concerns and the jokes is like it's a great way to just express that you do understand. You are aware. You are aware of what's being said, and you're aware of where those concerns come from.
Yeah, I think unfortunately we have reached this uncomfortable place where we've lost our funny bone. And any opportunity to reintroduce it, we should take full advantage. But there's something that you brought up that I think is almost like glossed over. But this idea that, oh, all the podcasters are going to be going and working for these treasury companies, it actually makes perfect sense. Yeah. The job of these people is to speak in a way that they can speak to the masses to better understand a very complex system, both technologically and economically. And so they've proven that they're experts in exactly that, speaking in a way that is easily digestible for everyone. And that's why it feels like a very natural transition to go from podcasting for hours a day or week, talking about Bitcoin, talking about the economic implications of this asset, to then working for companies that want to explain why this strategy makes sense, not only to their investors, but to the general retail public as well.
100%. It's completely reasonable and natural. These are people who have demonstrated competency in the public sphere communicating about Bitcoin. And every company needs to communicate what it's doing in a way which can be understood. That is so simple and clear. And the reason it even gets to the community at all, and there's these kind of comments and jokes and things, is I think there's just been there's always a line that these popular figures walk. There's a long history of crash outs. There's a long history of cash outs, crash outs, and other things, right? We can all think of the controversies that various popular figures in Bitcoin throughout the years have undergone, and the products they've endorsed, and the things they've done, and and so I think there's a sensitivity when you see influencers, you see popular figures in the Bitcoin community kind of doing this new thing, especially something that's novel and we're figuring out. This is a new idea. Treasury companies are, on one hand, MicroStrategy has a long operating history and has proven itself. On the other hand, scaling, it's obviously going to scale up rapidly this year. And there's plenty of concerns there. And this comes from an industry which, has seen all measure of new financial engineering, mostly on the crypto side or on the third-party side, the lenders, the leverage, the DeFi, the yield, all of these things, right? So novel financial ideas activate a measure of skepticism, I think, in so many Bitcoiners at this stage. Understandably so. I think you want to affirm and acknowledge that of all the various things that have happened over the years. And now, that doesn't mean they're all the same. And that doesn't mean they have the same risks. And that doesn't mean they're going to come to the same ending. And that's important. However, there's another thing that's important to say, and it's that no one can know ultimately what will happen with new ideas. And the key of entrepreneurship, the key of markets, the engine of capitalism is risk-taking. You do, there is risk, with anything. You have to take a measure of risk. You have to do something where the outcome is not guaranteed. And this is true everything. This is true with everything. And so one can't just cease doing new things because there is risk or there is a lack of certainty, because one would never do anything. In fact, Bitcoin would have never been created if that was the case. Arguably, you just still have that factor on every level. And so I think the skepticism and the hesitation that the Bitcoin community has to new forms of sort of financial products and things is well earned, and legitimate over the years. But also it's important that, we move forward, and it's important that we do try new things. And actually, I would say that MicroStrategy has they have proven that you can do this, and you can do it through the bear market, you can sustain it, you can come back. There's still, remaining questions of like, will every other new company do it as well as Saylor did? Almost certainly not. And what impact will they have? We'll find out. But I think unlike the yield games and like some of these other things, I think the operating history of MicroStrategy does actually add, I think, a reasonable amount of conviction that one should have that there are at least some key differences with this. Materially, that there's a giant pile of Bitcoin collateral that as long as you don't take on a lot of callable leverage, there's really no way to liquidate it. And that is a huge difference versus all of these other new ideas that have come through both Bitcoin and crypto.
Yeah, I mean, as we're kind of on this topic, I would be remiss not to maybe ask you what impact MicroStrategy's strategy, for lack of a better word, has had on the general push towards these Bitcoin treasury companies. And if I may ask, where you see this going outside of just strictly Bitcoin treasury companies in the future.
And just the last part of the question, when you say outside of strictly treasury companies, what do you mean?
Like for example, I'll tease, even though by the time this comes out, my article will be released, of potentially dividend paying stocks that we're familiar with, who may rethink their strategy accordingly.
Yeah, beautiful. So what impact do I think MicroStrategy has had? So actually, my base take is that the majority of new Bitcoin adoption that happened this last year was via MicroStrategy. The class of 2024, 2025 is a MicroStrategy story. These are people that bought the stock. And that was, they owned MicroStrategy before they ever owned spot Bitcoin. And there is this new cohort. This is something I've had to come to terms with and navigate just in my role, my previous role at Swan, is huge interest. Just absolutely massive interest. And clients that they're really taking a material allocation to MicroStrategy, or they have, or they did and then it grew. So it's a huge part of how it happened this year. And as far as where it goes, you need large holders of Bitcoin who are willing to take the directional risk of holding the asset in order to issue novel financial products that could only be issued if somebody is willing to sit on 100,000 coins or 50,000 coins. And so MicroStrategy's fixed income products are an example of that. They're only able to pay the higher yield because someone is taking the risk on Bitcoin. So I think as these companies develop, there will be even more financial products that get issued. There will be BTC denominated financial products. There'll be BIT bonds. There'll be all sorts of instruments. There will be novel things that you can only do because there is a large public company holding a lot of Bitcoin. And those things could not exist otherwise. That's where this is going. And I've been having conversations about the Treasury company thing ever since my announcement came out. And some similar news from Swan this morning. Like, this is a topic I think everyone will be talking about. And the way I think of the world, right? You have some things are inevitable. And it's important to recognize which of those they are. And what I mean by that is that there is no scenario where you can invent the best hard money, the best capital asset in the world, and not see corporations start to acquire it and securitize it and build products on top of it and use financial engineering to get more of it. That was never going to happen, like not happen. The only way that you would not see this is if Bitcoin failed. Bitcoin can't succeed and you don't see corporations buy Bitcoin. It just isn't possible. And so if this is a given, if this is inevitable, your way of relating to it changes, your decisions change, where it's not this question of do I think it's good or bad that this happens? It's more, since this is going to happen, what do I do? And in a very real way, one of my decisions, one of my views there is that if companies are going to securitize Bitcoin and do all of this activity and acquire a ton of Bitcoin, then I would prefer that Bitcoiners ran those companies rather than Wall Street. And some people might have problem with that reasoning if they think this is bad or it's against the spirit of Bitcoin. It's well, you're just kind of leaning into this thing or doing it or you're helping it happen either. But there's a very real way that I would argue, and I think I have a substantial argument, that if this is going to happen no matter what, I vastly prefer a world where Bitcoiners are running those companies.
And I think that's the most important part of what you're saying here is it is inevitable, not just in the context of Bitcoin companies, but the larger publicly traded market. As more and more Bitcoin treasury companies show success to their shareholders, these companies have a duty to their own shareholders to say, we need to revisit this. We need to explore what does our own Bitcoin treasury strategy look like from an Apple or a Coke. Now, Warren Buffett may have a heart attack if Coke were to turn around and say, hey, we're exploring a Bitcoin treasury strategy of sorts. But at the same time, if you start to calculate it out and see, well, if we even just allocate, 5% of our dividend yield to acquiring Bitcoin, the general shareholder value will increase greater than the yield of the dividend. We owe it to our shareholders to actually explore this in a real way. But the real point that I want to just emphasize, Stephen, what you just said, so our audience grasps this, there is a vast difference between a casual investor who has not spent time studying this asset and what its potential and what it can do, not only for the business, but also globally. There is a vast difference between someone who is entrenched in Bitcoin and someone who is just casually aware or observing it, leading that charge.
100%. And the reason it matters that Bitcoiners lead these companies is because you want true believers leading these companies. You want people that actually care about Bitcoin, that believe in Bitcoin, and that, have some experience with the volatility and the asset class, as well as the industry, and understand the investors and understand all of it. If you just leave this to be fought over by hedge funds and Wall Street, it's going to look a lot different, and it's not going to be better for Bitcoin, right? And so I think just something I've thought about and something I would say to the community is and I don't think I don't share these criticisms, by the way. I don't think that treasury companies are a bad thing, and so we just need to mitigate the damage by having Bitcoiners involved. I think they are good. I think there's a lot of positive about them. But even, I'm mostly addressing the people that do have those criticisms. Even if you did have those criticisms, you still it would be better for Bitcoin that Bitcoiners are running those than otherwise. And so Bitcoiners have the opportunity to not only have a first mover advantage, but to make sure that other parties don't have that first mover advantage.
Also, I think there's an important thing that I'm going to ask the question and also mark it that maybe you can't answer this, but we haven't seen this influx of Bitcoin treasury companies in a bear market yet. We haven't really seen a majority of these companies deal with the inevitable, or not inevitable, I should say, but the consistent bear market that we've become accustomed to if we've been in the Bitcoin space for long enough. I'd love your thoughts if you can share on what that market turbulence may do to market sentiment around Bitcoin treasury companies, as well as new Bitcoin treasury companies trying to enter the space in what would theoretically be a very opportune moment to be accumulating.
Yeah, I love the end of that question. So, there will be declines in Bitcoin price, and you will see share price go down for these companies. You will see the MNAV compress. You'll see all of this, right? This is something that'll happen. And so it matters how companies are positioned for that. It matters a lot that they don't have a bunch of callable leverage and short-term debt. You need to be prepared for it. This is something I trust that Bitcoiners will be better prepared for than others, to not have stuff that would really be a problem in the bear market. I think that's an imperative that all these companies need to focus on. But you will see those decline. I don't think it's the end of those companies, and MicroStrategy proves that. They made it through a nasty bear market despite being like a first cycle entrant. And so like these companies can survive those, they can position themselves. They need a different strategy, and ideally they need to have prepared for that ahead of time, not just like implement it once they're there. There's a number of factors that can help. And, it becomes just as much of an execution strategy to navigate that regime of like falling prices when that period comes. There's some question marks on what that will look like. Will it be different this time? Will it look different because of all this adoption? I could see that being the case, but, time will tell. And then you ask this question, do you think there'll be new Bitcoin treasury companies that spin up in that time? So it's like, let's say prices were down for a while. It would be harder to raise capital to do a new one in some ways, but there's also a way that you would be able to leapfrog other companies, right? Like if you're able to buy the Bitcoin at a discounted price, then you raising $1 billion or whatever would get you further in the rankings than if you did that previously. And it would also show the market a sign of strength that like, wait, these people are able to raise money even in a bear market, which gives them an advantage, which allows them to raise more money. And in a most positive scenario, the ability for new treasury companies to enter during the bear market to acquire more coins at an advantage actually softens the bear market and reduces the extent of what happens there. I do believe most Bitcoin bear markets have been characterized by a true loss of conviction, a real fear about, is Bitcoin over? I don't think that can really happen anymore. And so that's another big factor in maybe seeing either more mild or shorter lived bear markets. So we're going to see, but I know there's a lot of people with concerns around that. And in some ways, because we've never seen it before at a large scale. In other ways, we have with MicroStrategy. But we assume, not all operators are going to be as good as Sailor. So we're going to see. But I think there's a few ways it could play out.
Well, Stephen, as we wind down our time together, I do want to first off say thank you. And we are all very excited to see the work that you and Nakamoto will do. We are going to be rooting not only for you guys and that Bitcoin treasury company to succeed, but the countless others that are starting to announce even today at the time of this recording, and countless others that I'm sure will be announced over the next few months. We will all be paying very, very close attention. And before I turn the mic over to you, I also just want to say from the bottom of my heart, thank you. As someone who has learned from you from afar for years and enjoyed not only your Bitcoin lessons and tweets, but also your very, very entertaining shit posting. It has been an absolute honor to get to spend quite a few hours with you just learning in this masterclass. I look forward to continuing our friendship and our conversations over the years. And from myself and everyone at Swan, thank you for everything you've done and built here during your time.
Thank you. That is kind, and I appreciate that feedback, and it means a lot. It's been an incredible, I've been at Swan for over 4.5 years, and it's been an incredible journey, and it's been life-changing for me, working with the Swan team, all the clients, all the supporters, and people that have helped us over the years. changed my life. And I say that in a very real way. It's not a talking point. It really did. I am not the same person I would be if I hadn't come to Swan. And, Corey took a shot on me when I was relatively unknown. I did not have a very impressive background. I hadn't worked in any Bitcoin companies really outside of a consulting work. And so I feel a true debt of gratitude for Corey and for Swan for taking a shot on me when it was less clear. And it let me have this incredible experience building private wealth for Swan and for all our clients. Bitcoin's a special place, and it's a special industry, and I think it's filled with special people on both all the sides, right? And I've met so many incredible people through Swan and clients and just people with the most interesting stories in life that came to Bitcoin, that participated in Bitcoin and found that to be something that really benefited them. So I'm just really grateful for everyone I've met, and I'm really grateful to have been able to participate in Bitcoin's story from the time from the time I started, but being professionally involved is a different angle than just buying it, and it's something I'm very grateful for. It's there are certain experiences that are just so valuable for themselves, and for me, obviously, buying Bitcoin, making money buying Bitcoin, working, having a measure of kind of external success is great. But there's another way, it allowed me to participate in this new movement. It allowed me to participate in this really dynamic force that was Bitcoin that I just wouldn't have gotten to otherwise. And that is so valuable outside of anything I gained from it, exactly, of just the experience itself. And Swan was an incredible place for that, just a rock star environment that I can't think of a place I would have rather been during those years.
I'm going to not cry, I promise. Stephen, seriously, thank you. Thank you for all of your leadership and guidance and all of the lessons. I've told you offline countless times. I'll tell you here publicly. I apologize in advance for the silly questions that I'm sure I will send your way, even when you're long gone. For everyone who is watching, who is not already a Swan client, please hop on over to swanbitcoin.com, set a time with one of our private reps. You are also more than welcome to email me directly, q@swanbitcoin.com. Stephen, thank you so much for your time. Thank you everyone who has watched and tuned in for the entirety of this series. I hope you've learned just a little bit, if not quite a bit, not only about Bitcoin, but about how to just become better at whatever it is that you're doing. Rooting for everyone to have success on their own Bitcoin journeys, as well as yours, Stephen.
Thank you. It's been a pleasure.